What's going on, y'all? We're just going to be doing some analysis today on the Euro USD. Looking at possible opportunities that might be shaping up, especially with it being the jobs report day. But ultimately, you know, I'm not trying to tell the market when it has to go and when it might go or anything like that, because we can never know. But just the way that price is shaping up, the patterns that are shaping up, and the time that it's getting to be, there might be some good opportunities that present themselves today. So we're just going to get into it. Going to go out to the weekly, start there, as we always do. All right, and on the weekly, as we've been looking at for the past few weeks, we're seeing this overall expanding pattern, right? With these 1, 2, 3 touches at the bottom, 1, 2 touches at the top, looking for a possible touch of the third touch at the top, or a possible breakout to complete the 90% rule of this pattern to get to the beginning of the correction of the pattern, the beginning of the pattern, right? As we're looking at on the weekly, and that's where we get like our long-term prediction from. Also, in line with that is the daily. So if we go down to the daily, go down to the daily, we can see 1, 2, 3 touches at the bottom, 1, 2 touches at the top, 3 touches at the top actually, right? So we completed this descending pattern, and basically the prediction we get from this is, or the possibilities that we get from this is, we could break out and complete the 90% move of this daily correction, which would also come in line with the third touch of the top of this weekly descending channel. So that's a good possibility right there. Or ultimately, we could, because of how we moved off of the daily and weekly bottom, because we moved off very correctly, as you can see, we moved off in the form of this ascending channel. We could see a push lower again, right, for possible double bottom to 1088, the 1080s level, or we could push all the way back to another touch of the bottom trend line before ultimately pushing higher, if that's what price wants to do, if price ultimately wants to push higher, right? And so we're just going to keep going here, and we're going to see that also on the daily is the first time that I mentioned before, this ascending correction that we're getting. It's more of kind of a wedge pattern, but basically it's an ascending type pattern. And that's where we got our third touch of the top of the daily pattern. So that's what leads me to believe, or have a, leave the possibility up in the air for me that price could push lower and, get a double bottom within this pattern or all the way to this trend line. So if that happens, I'm definitely not going to be surprised, especially because the market can do whatever it wants, whenever it wants, however it wants. The market can stay erratic or irrational longer than we can stay solvent. So that's something I always keep in mind. But just getting to the 4-hour, you can see this ascending pattern just a little bit better, in that you get the 1, 2, 3 touches at the top, and then we got this extension of the pattern in the form of this ascending channel to get the third touch of the daily descending pattern, right? And then we got the break lower, impulse, correction, impulse, and now we're getting another correction to form more of this descending pattern on the 4-hour, right? And then also the 1-hour. But the thing about this descending pattern is it's a pretty steep pattern. Generally what we'll see from, because we did get this impulse before the pattern, we got this solid impulse before the pattern, but generally what we'll see is impulse, flatter correction, right, before a push higher. But that doesn't mean that the descending pattern that we're getting isn't valid. All that means to me is I really want to wait for the high value areas, right? So, or like make sure that the market is showing its hand, and I'm taking opportunities where the market is showing its hand, opportunities as per my plan, where the market is showing its hand, right? So essentially what I'm trying to say is, as you can see, we get in this daily descending, this 4-hour descending pattern with this smaller descending pattern within it, right? And this could have been, an area where people would have taken like a couple bites of the apple, try to catch a falling knife. But just in my own back testing and the way that I've reflected into my plan, I know that that's kind of not the best way forward, just because just what I've seen from my back testing, best way forward for me personally. And I'll say that because ultimately anybody can trade however they want as long as they have a positive expectancy. Basically, with my back testing, I've seen for me that it's better, especially on steeper corrections like this, it's better for me to wait for either this smaller pattern to complete. And basically, what I mean by complete is we get a third touch of the bottom of this pattern, right? Which would also come in line with around the third touch of the bottom of the bigger pattern, which is good confluence, or because we're getting this double bottom, or possibly getting this double bottom within the pattern, I want to see, not I want, but as per my rules, I'm going to wait for that first impulse, first tight correction, right? And then I'll be looking to enter there. Right. I'm just going to do this real quickly on the 4-hour. Impulse, first tight correction. Stop's not really important right now because we are on the 4-hour, and I will be pulling down to the 1 hour to get more of a better entry, but just an idea of what is a possibility and what is one way I would kind of basically what would be the override for me, and for me to not wait for basically, and I'll just put my do not disturb on real quick, sorry. Basically not wait for this ultimate high value area of the third touch of this smaller pattern and this larger pattern, right? That would be the override type of setup as per my plan that would, you know, be valid for me to get entered into. And as we look more on this, I'm just gonna neaten this up to the wick. Apparently I pulled it away. But as we look more at this, it makes sense, right? Basically what I'm saying is we are possibly getting this scooping double bottom within the pattern. All right. And we could ultimately see a nice solid 1 hour retrace off the bottom of the pattern. But that doesn't mean that price has to go right now. Price doesn't have to go at all or at any time. Price could ultimately kind of just form more of this type of correction and then push lower again before correcting. And at this point, definitely would be good areas to look for a risk entry from. Because if we extend this, it's a little bit better. This, push lower, correction, push lower again, and then we start to get more of this correction. This area, great area for risk entries, right? And so kind of drew this a little bit too far, but you get the idea. I mean, I don't know when, how, or if price will, how far price will go, if it goes at all. So I'll just leave it like that, right? And this would be a good area to look for risk entries, right? Because at this point, we have this third touch of this bottom. And then on top of that, we would have broken past the double bottom of this pattern within this pattern and then became corrective. So that'd been a great area to look for risk entries. You know, nice, easy 25 pip, 24 pip stop, more than enough. All right. Could also see price push off, hover, and then push again. If we get that hover, that'd be a good area to get entered in. Again, 24 pip stops is more than enough. 24 pip stop, more than enough. Just want to leave the market some room to breathe, but also want to know that I'm wrong as quickly as possible so I could possibly flip my bias if need be. On top of that, price could kind of just continue further. hover around here possibly, drop out, start to get corrective, come in line with the third touch of this pattern, or this smaller pattern, and a third touch of the larger descending pattern, or the bottom of the larger descending pattern, and the bottom of the larger, smaller pattern. Bottom of the smaller pattern, for an ultimate risk entry, or possible reduced risk as well. If we miss the risk entry, we could also enter off of something like this. Right? Again, 24 pip stop, more than enough. I'll leave the market room to breathe, while also letting myself know I'm wrong as quickly as possible. I guess letting the market let me know I'm wrong as quickly as possible. All right. You could see it drop out impulsively, and then we form more of the running channel at the end of this descending correction to continue to push lower, as we were talking about before. That it is a possibility that we break out and visit this 10880s level, right? Or possibly all the way back to the bottom trend line, or possibly just break lower before pushing higher, if that's what the market wants to do, because there are a few inflection points along the way. If you look at here, here's a nice area of liquidity in the 110, 1000 level. Another good area of liquidity would also be around here, 10980s, 10980s, right? Good areas of liquidity. And we have another area like here, the 10940s. The price could turn around at like a lot of these areas. Basically what I'm saying is the way I'll be looking to flip my bias from a buy to a sell is if we form one, we could continue lower, form more of the running channel at the end of this descending correction, and then break lower. It's a possibility. Or if we rein this back, we could see price, because we're getting this double bottom, we could see price kind of trickle up, right? Complete more of this pattern right here. But since this would be more of a valid setup, again, I'm not going to be looking for risk entries as per my rules. We're going to be looking for first impulse, first tight correction, all right? And then I'll be looking into there. On. Looking into there as well. That's a possibility to get into in. At this point, 18 pip stop. More than enough, just because I want to be able to let myself, I want the market to be able to let me know I'm wrong as quickly as possible. But in our reality, as I say that, probably need to let it breathe a little bit more. So again, go 24 pip stop. So that's another way to flip my bias. Or ultimately, we could just see it break lower, tight correction, push lower, hover, and then a break, right? I'm not going to be looking to take the tight correction because at any point, since the higher time frame momentum is pointing to the upside, any point this can impulse down, reject, and push higher. But I would look to take that hover right here, all right? 24 pip stop, again, more than enough. Fits my rules. On top of that, fits my rules to wait as well, just because the market, this wouldn't even really be a setup that is recognizable as per my plan. I mean, the first correction right here, this first tight correction, it's not a setup that's recognizable as per my plan. It's a tight correction within a descending correction. looking to the downside. It's not something I usually look to take. It's not something I'm just going to take out of the blue just because the market presents it. But this hover is part of my plan, as we would be hovering on the larger 4-hour daily ascending channel. And that would be a good area for me to look for sales from again. Targets down here, 7%. Right. Right. Ultimately, this is what we're looking at right now. This is what I'm looking at right now on the euro. Right. I'm just trying to think to myself that I cover all my bases forecasting wise. Because one thing I'm realizing with my trading is there'll be things that I forget to forecast and they'll pop up, right? And that one shows me a few things. I'm probably not being as open to the market as I should be, which is something that I'm working on every single day, writing trading affirmations, letting myself know every single day that I don't have to know what's going to happen next to make money. I just have to know what my edges are and take them and give themselves an opportunity to play out. Two, I need to back test some more, which is something that I'm doing as well. Back testing every single day now, right back to it. You know what I'm saying? So definitely something that I'm trying to make sure that I get better at is forecasting and everything like that. And when I say forecasting, I'm not doing forecasting to try to say, oh, I know what's going to happen next in the market. If you notice, I forecast multiple possibilities and opportunities because I don't know what's going to happen next in the market, but I forecast to let myself be prepared to take those opportunities that would fit my plan if they were to present themselves, right? And so it's all about when I get there and those opportunities present themselves, I'm not panicking. I'm not saying, oh, do I enter now? Do I enter now? So, like, for example, if we go back to this trade, that was a nice 2% winner. I forecasted the possibility of getting more of an ascending extension. And on top of that, I forecasted also the possibility of within that ascending extension, we get an impulse correction, and then I would enter there, right? And so I forecasted that and I was ready for it. And so I was traveling. All I had was a Wi-Fi connection on my phone. I wasn't near my computer. But the minute that I saw price form this last doji candle and I knew that it fit my plan, I was able to get entered, and I collected 2%, right? Just because I forecasted the move, I forecasted the possibility, right? We even had this hover here, which I also forecasted as a possibility as well. So I could have entered here, could have also entered here for a little bit better of a risk reward ratio. But again, the main lesson is forecasting was able to allow me to take opportunities when I wasn't really at my computer, right? And that's the importance that I place on it. But other than that, just getting back to it, looking at possible buying opportunities on the euro. All right, gonna be looking for a nice solid 1-hour retrace. First hover, if that's what price wants to do, then break out. Or if price ultimately just wants to break out of the pattern, first tight correction is good as well, because we are looking with the higher time frame momentum on our side. So there's a lot of money to be made. There's a lot of percentage to be made. So I'm not really worried about missing the first move because there's always more opportunities with the market. That should also be a good one right here. Let's see what the stop's looking like. 25 pip stop, let it breathe. Yeah. This is what I'm looking at. Also possible opportunities looking to the sell side as well. Staying open to those. Hope you enjoyed it. Hope we were able to provide some value to you today. As well. At the Traders Corner, we're always just looking to first and foremost document our journey because we all have aspirations to do more with trading. You know what I'm saying? Me personally, I hope to one day trade investor capital, and not only is the Traders Corner a way for us to provide value to others, but it's a way for us to document our journey. And ultimately, when I get to that point where I am trading, where I'm ready to trade investor capital, and I'm looking for investors to take on their capital, I'll be able to take a lot of these videos, a lot of these screenshots that I post on Instagram, a lot of the forecasting that I do, and show it to them and be like, hey, here's how I do it. I have a systematic method to do it. You know what I'm saying? I don't just trade willy-nilly. You can trust me. I'm not saying that I'm going to win every single time because nobody will ever win every single time. Anybody in the market who tells you they win every single time, is one, a liar, and two, probably trying to sell you something. But even traders who win like 90% of the time, they still have a method, right? And on top of that, they still take the odd loss here and there, right? They still have a method, they still have a methodology about how they do things, but it might win more than the average bear. But I'm not worried about 1%. What I'm worried about is being able to document my journey, show investors out there, hey, I have a system, I have a way. I don't just trade willy-nilly. I don't just do whatever I feel like that day. You know, here's how I've grown. Look at my journey. You can see that I've, really been out here grinding, really been out here learning and teaching myself, trying to teach others as well. So you can trust me with your money. I'm not one of these Forex scammers who's just going to take your stuff and not know what I'm doing. That's kind of the basis for what we're wanting to do here. And then at the same time, if we're able to provide any value to anybody out there as well, you know what I'm saying? That's one of my big bases for doing what I'm doing. My colleagues as well. They're people who like to teach, or the people who like to show others how to do what they're doing. So I think that's their big basis as well. And I've genuinely enjoyed teaching as I've taught them. But again, we're all three of us. We're just out there trying to document our journey. Put ourselves out there more in the Forex space. And then if we can also provide value to anybody out there, that's just a plus. That's just a bonus icing on the cake, right? The fact that if anybody is watching this video, I'm happy because that means one person cares about what it is that we're saying, right? And so hope you enjoyed it. Hope it provided some value to you. If you enjoyed it, like, subscribe. If you're feeling really generous, share with a friend. You can also follow us on Instagram at traders.corner. Yeah, hope you have a good one. Hope you had a profitable week in the markets. I took 2 losses this week, but we move on because I started January with a plus 2% win. So right now I'm at break even, no big worries there. You know what I'm saying? Even if I was in a drawdown, I would be telling myself no big worries. Now, whether I believe it or not, who knows? But I got to tell myself that because it's something I have to ingrain into my mind, that right mindset of taking the opportunities as they present themselves, right? Taking the valid opportunities as they present themselves. So yeah, that's what we're looking at right now in the markets. Hope it provided some value. Hope you enjoyed it. Join us again next time.